Hey guys, welcome back to a brand new video. I'm Rex Finance, and I'm sure you know what happened today, but for all of our brothers and sisters that live under rocks, if you didn't see it, CleanSpark was up by 28% today, and this is after them being down 7 and 8% after hours yesterday after reporting their earnings. And you know, obviously I was getting flamed all over social media because this company is one of those companies that I have staked my entire brand behind. This is a company that I really believe in, and it's a stock that I've been covering on my YouTube channel for a very, very long time. And the first impression for everybody, with an EPS miss of 194% and revenue miss of 10%, was all negative, which is why the stock was down 7 and 8% after hours. But after digging beyond the headline numbers, I kind of threw together a quick StockTwits message that I posted on the CleanSpark StockTwits board. If you have StockTwits and don't follow me, make sure you follow me there. It's basically Twitter for the stock market at Rex Finance. But I said, read beyond the headline. They had around a $10 million impairment charge for ending their energy business, which was burning cash monthly anyways. That is a significant hit to the EPS, which we all know missed by 194%. But with revenues of only $31 million, a $10 million impairment charge is going to impact that EPS number significantly. The company posted positive adjusted EBITDA, and the company came out and raised guidance for the end of the year this year and raised guidance for the end of the year in 2023, saying that they plan to be at 22.4 exahash per second by the end of 2023. Right now, the company's at around 3 exahash per second, so there's a lot of doubt that the company can actually accomplish this, but I included in my message here. They've been really good at being ahead of schedule. The original projection for the end of 2022 was for the company to be at 4 exahash per second, and they upped their guidance, like I already mentioned, to 5 exahash by the end of this year, or 25% above their original guidance. Folks, there is not a single other management team in this industry that has risen their guidance, that has increased their projections for this current year and years going into the future, which is part of the reason the stock was up so big today. This company continues to be the only miner going on a serious buying spree in this crypto bear market, and they will be rewarded. We know that when a company goes out on a buying spree and scoops up assets at rock bottom prices, you know that the management team backing that company is a very good one that is going to execute. And folks, that is also something that is really lacking in this industry, is a management team that does their job and executes for shareholders. I also mentioned briefly in my message that the company still has lots of room to leverage their balance sheet with over $400 million in assets and growing, and next to zero debt. The company remains in a great spot. Hands down, CleanSpark has the best balance sheet in this industry, which is providing them the most flexibility to make moves, to make accretive acquisitions, like they just announced on earnings day as well, which I'll discuss in this video as well. But they're growing in a bear market. They're taking advantage of these cheap prices and growing their business. Another reason the stock was up so much today is because they had their price target doubled by one of the analysts that cover the stock. They raised their price target from $6 to $12. So H.C. Wainwright expects CleanSpark stock to go to $12 within the next 12 months. However, one thing that some people don't realize is H.C. Wainwright's price target is based on CleanSpark hitting less than half of their guidance for the end of year 2023. And they cover this in their last paragraph here, that their model conservatively assumes the company exits fiscal year 2023 at 10 exahash per second, or less than 50% of guidance. Now, I personally think that that is being way too conservative, but even if you just think about this, if H.C. Wainwright really did believe the management team would accomplish reaching 22.4 exahash per second of mining power by the end of 2023, what do you think that would do to their price target that they would give? Well, their price target would easily double. The price target would probably be between $25 and $30 per share, which sounds insane in today's market, which is probably the biggest reason why they only assume the company is going to reach 10 exahash per second by the end of 2023. So given all of this new information we were given yesterday during the earnings call and the new acquisition CleanSpark made and their new facility, all this different stuff, I need to make some changes to my price target for CleanSpark. My most recent video broke down a whole entire spreadsheet that I put together, a CleanSpark spreadsheet that goes in depth in all facets of their business. I'm going to need to make changes to that. In today's video, I will be covering all those changes that I made and updating my price target. Hint, we have a lot of room to grow here in the share price with CleanSpark in order to be fairly valued. I made this huge in-depth spreadsheet that you'll see later in this video available to all of my paid members. You're going to find value in this membership. I promise you that. And if you don't, cancel the dang membership and you're out a few dollars. And, I'll even throw in a full refund. If you don't find value in this membership within the first month, I'll refund that entire monthly purchase for you. You're going to find value in that. I can promise you. And another thing that I've started to make available to my paid members is different documents and notes that I take from talking to different management teams and connecting with those management teams and discussing different earnings reports and really getting answers to a lot of questions. That is going to give you a huge advantage in the stock market, and it takes time to develop those connections, and that's another thing that you'll find value with the membership. Without further ado, if you're new here, returning, not yet subscribed, please subscribe down below. Also, hit the like button if you like this sort of video. Without further ado, let's go ahead and jump into this video. One huge piece of news that we got in yesterday's earnings release was that the company officially shut down their legacy energy business segment, which kind of brings a tear to my eye because I started following this company when they were big into microgrids and renewable energy, solar, wind, etc. All of that's kind of in the rear view mirror now, and it makes sense. This energy business had single-digit margins, was burning cash flow every month, and the company now can focus all of its time and energy and resources into a business that is more like 80 or 90% margin, that is cash flow positive. It just makes sense that they would divest of this energy business, this legacy business segment. And by doing that, one of those advantages is the company is decreasing its monthly cash burn by quite a large margin. We know by things they've disclosed in the past that the energy business was burning a few $100,000 per month, which doesn't seem like that much in the grand scheme of things, but over a year, that's over $1 million of cash going into something that is not generating you hardly any return, if any return at all. So they went on to say during the earnings call that by shutting down this legacy energy business, they're decreasing their cash burn in that business segment by about 80%. So if we assume the company was burning around $300,000 of cash monthly with the energy business segment, I would guess that they're only burning around $50,000 per month as it stands currently. And after they sell all of their assets, after they completely get rid of that business segment, obviously there's going to be zero cash burn there anymore. But that is a huge, huge increase and benefit to the bottom line, decreasing the cash burn like that. And this is just another reason that the stock was up so much today. With divesting of the energy business segment and selling those assets, obviously they're going to see some proceeds from that. They're going to have some sort of cash inflow from that. And on the balance sheet, they list assets for sale of about $10 million. And I know there's people out there that own this stock that are really hoping that the company can get $50 million or more for this energy business. And by selling that, they can, reinvest this $50 million or more into the mining business segment. But personally, I don't think that is going to be the case. I think the company's only going to receive between $10 and $15 million for all of the energy business assets and through divesting of all of that stuff. And the reason for that is pretty simple. This is a cash flow negative business with 10% margins. And those two things don't add up in today's market. People simply are not interested in a business that is delivering single-digit margins and, a cash flow negative business. People just aren't scooping that sort of asset up. Now, the assets listed for sale, I'm sure, consist of things like Tesla batteries, maybe some Enphase batteries, other brands of batteries, solar panels, switchgear, you name it. All that stuff has some sort of value, and they will get cash for all of that stuff. And they also have some receivables and prepaid expenses that they're probably going to collect on and get all of that cash back, which they can reinvest into the mining business. And they're probably going to be able to sell some of these software businesses that they own for somewhat of a premium. Those software businesses are much closer to 90% margin, like mPulse and Grid Fabric. They'll be able to get some sort of multiple on the revenues of those businesses, which is why I think they'll receive between $10 and $15 million, all inclusive, for the energy business segment, which I know is going to be a Debbie Downer to a lot of you that thought they were going to get $50 million for all of it. I just don't think that's realistic right now. now, and I have not added that into my projections for the company because of it. Another thing that I wanted to cover quickly before we dive into the spreadsheet and the adjustments I made to that spreadsheet, my new personal price targets for the company, I wanted to cover this new acquisition that the company made in Georgia. And you'll notice also in the earnings call that the management team has kind of a fascination with Georgia, where in the earnings call, if I can pull this up quickly, they talk about how we also feel very comfortable with our operations and geographic location in Georgia, as we experience greater uptime than many of our peers who have operations concentrated in the state of Texas. And the word Georgia is mentioned 11 times in this earnings call, which is quite significant. Now, this new acquisition is of a site in Washington, Georgia, which is currently at 36 megawatts, and it's expected to add 1.1 exahash per second to CleanSpark's hash rate over the next 30 days. That is a 40% increase to CleanSpark's current hash rate, basically overnight. Another reason the stock was probably up really big today. Now, also, as a part of this purchase, they bought the Bitcoin mining facility and the real estate, but they also bought 3,400 new Bitcoin miners of the S19 series for about $8.9 million. But the fun thing here is, given the management team's obsession and fascination with the state of Georgia, I think this is probably just the beginning of the acquisitions that are going to be made in the state of Georgia. If I'm not mistaken, CleanSpark owns every single facility that they mine Bitcoin at in the state of Georgia. That is in contrast to them co-locating their miners up in New York, where they do not own that facility. I think they're going to heavily focus and concentrate on the state of Georgia, given the increased uptime and runtime that they have compared to their peers in the state of Texas. For example, Riot has had to shut down numerous times for extended periods of time. And in the earnings call, CleanSpark's management team discussed that in Georgia, the most they've really had to shut down for to curtail and help out the overloaded grid is just a couple of hours. So if I were a betting man, I would guess that over the next couple of months, we're going to see a few more acquisitions by CleanSpark being made. And this is a huge bonus here. CleanSpark's management team is a builder. They are taking advantage of this market downturn. They are buying up assets like no other company is currently. The company clearly wants to continue to go on a buying spree as prices for Bitcoin miners and facilities have hit rock bottom. So that's also just part of the reason I believe this is just the beginning of acquisitions being made in CleanSpark's favor. Also, by my estimation, and given the total purchase price of this Washington, Georgia facility of $25 million, I believe the company is going to pay off this purchase and return their capital within a single year. That is a tremendous deal, and I've been extremely impressed with the CFO of this company and the deals he has made. In the past, the management team has also discussed placing solar panels on the roof of their Norcross facility, but that wasn't even mentioned a single time in the earnings call or the earnings news release. And this leads me to believe that this is probably not going to happen anymore, especially given the fact that they have divested of that energy business, or at least they're trying to do so. I don't think they're going to put solar panels on the roof of Norcross anymore. The fact of the matter is that solar panels are really not going to move the needle hardly at all when it comes to the cost of electricity to power all of those different miners. And if I were CleanSpark, a company that is scaling up quickly and focusing on their EBITDA margins, I would focus my attention on using my scale and using that as negotiating power to negotiate better PPA or power purchase agreements, rather than trying to deploy these solar panels that take a long time to deploy and install. Now, back to the new facility that CleanSpark has purchased. This purchase is going to add about 5 Bitcoin per day of mining power for the company, which is huge. This is also likely why the management team has increased their guidance for the end of 2022 to 5 exahash per second. And I'm guessing just because the management team has showed that they want to own their locations and focus on their EBITDA margin and cut costs and focus on return on investment most of all, I'm guessing that this new facility, although it's not disclosed, isn't much more expensive to operate than their other facilities that they own. And because of that, I expect that this new facility has around a 4 cent per kilowatt hour cost of electricity. That's going to allow the company again to have tremendous margins. Most players in this industry, at least the ones that have disclosed it, have a cost of around 5 cents per kilowatt hour. So CleanSpark in this regard, thanks to their power purchase agreements and the fact they own their own facilities, is mining for around 20% or 25% cheaper than most of the other players in the industry are. And we all know cash flows of a company are all that matter to the share price. Also keep in mind that any real estate or facilities that the company owns itself can be used to leverage and take out debt. Think of a home equity line of credit. As the price of Bitcoin increases, the value of the miners the company owns and the value of the facilities that the company owns is also going to increase in value, allowing them to take out a line of credit on their facilities, which gives them leverage to purchase more Bitcoin miners. And this whole industry, this whole game is a battle for scale. It's a snowball effect. The big are going to get bigger, which is why execution and management teams are basically all you're betting on in this industry if you're choosing to buy Bitcoin mining stocks. That is why I have chosen to stake my brand behind CleanSpark. They hands down have the best execution out of any other management team of the companies that are publicly traded. Now let's go ahead and focus on this huge goal of reaching 22.4 exahash per second by the end of 2023, which they released in their earnings release. People are in major doubt that the company is going to be able to accomplish this because the company doesn't have the miners to fill up all of that capacity to reach 22.4 exahash per second. But I have one thing to say to you. Think about it. Right now in today's world and economy, is it harder to obtain miners or is it harder to obtain infrastructure? This is why the Bitcoin industry is transforming into an industry where you have to focus on infrastructure first. I think the days of getting more street cred for simply having tens of thousands of miners sitting in inventory ready to deploy are over. That makes no sense. Ever since this Bitcoin mining industry has taken off, the companies that have purchased all of these miners, these hundreds of thousands of miners, have not been able to deploy those miners on time, on projection, on scale. They have not been able to execute because they don't have the infrastructure in place. That is a major, major flaw. And this is something that CleanSpark has done way differently than the rest of the industry. They own their infrastructure. They have the infrastructure in place to be able to obtain this 22.4 exahash per second. And it is much easier in today's world and economy and market to obtain those miners on the spot market or after the fact, after acquiring all the infrastructure needed to house all of those miners. Miners that are just sitting in inventory and are waiting to be deployed are always losing value, whether that's inventory getting damaged, which happens a lot, or maybe a new model of miner comes out that is much more efficient than the previous generation of miner, which decreases the value of those miners you have sitting in your inventory. It just does not make sense to have all these miners on hand when you don't have the infrastructure, which is part of the reason we have a Bitcoin mining rig supply abundance right now. There are so many companies out there that are selling their miners they have in inventory because they're just losing value. They're not returning any capital to the company because the company has nowhere to deploy those miners. So to those of you that are asking, how are they going to pay for all these miners? It's going to cost them $500 million, $1 billion, you name it. The answer to that is over time. Over time, that is going to happen. Think about the snowball effect that I just got done discussing. The big are going to get bigger. The more Bitcoin you mine, the more Bitcoin you can sell to buy more and more miners, to mine more and more Bitcoin, to buy more and more miners. It's this huge snowball effect. And this industry, in the end, is going to belong to 3 or 4 major competitors, in my personal opinion, just because it is an entire battle for scale. Also keep in mind that over 16 exahash per second of this 22.4 exahash per second goal is dedicated to co-located facilities. Places and facilities that CleanSpark does not own. So if there are problems at CoinMint or problems at Lancium with their infrastructure and getting that developed for CleanSpark to place miners at, CleanSpark can very easily redirect that capital to the facilities they own or other co-located facilities of companies they've developed partnerships with. And as 2024 approaches and that Bitcoin halving event approaches, this is going to continue. There's going to be more and more opportunities for CleanSpark to scoop up assets for cheap and add to their hash rate total, add to the amount of infrastructure they own, because as the network hash rate goes up, the old Bitcoin mining rigs have to shut down, which forces a lot of smaller players to have to search for a buyout because they move into cash flow negative territory and they have this infrastructure that is ready, but they can't mine using that infrastructure because their mining rigs are no longer efficient. Those are some of those opportunities that CleanSpark is going to have to purchase more of that infrastructure for themselves and deploy more and more miners at. But now, without further ado, let's redirect our focus onto this spreadsheet that I have developed for CleanSpark. We have a mining rig purchases journal, which is fully updated as of the most recent earnings release. We have a cost of revenue analysis. I have not added the new facility to this because there are still a lot of unknowns. We still have the Bitcoin mining revenue opportunity. And then we have this whole deep, in-depth spreadsheet for CleanSpark that I've come up with my own personal price targets for. You can see that in the top right-hand corner for 2022. I have a price target for CleanSpark of $19.29, 2023, $114, and 2024, $137. So you can see that I've made some changes to the spreadsheet that have benefited and increased my ultimate price target for this company. The biggest changes that I've made to this spreadsheet start right here at the top, where I've changed my 4.6 exahash per second estimate to 5 exahash per second based on the company's personal and owned guidance. I've also changed my year-end 2023 guidance from 16 to 22.4 exahash per second. The management team seems ultimately confident that they can achieve this, which is why I have placed this into my spreadsheet now. And I think again in 2024 they can grow their hash rate quite significantly given all the opportunities that the halving event might present to the Bitcoin miners that still are mining Bitcoin. So you can see over time this is going to increase CleanSpark's percentage of the total network to over 5%, 5.5% by 2024. And we can see I have pretty conservative estimates for my price of Bitcoin at $20,000 for this year in 2022, $50,000 for next year in 2023, and $75,000 for next year in 2024, which is where I got my CleanSpark's total revenue opportunity. You can see at just $50,000 per Bitcoin, if CleanSpark can obtain their guidance, they're going to be doing over $1 billion in revenue in 2024 and probably over $1.5 billion, close to $2 billion in revenue in 2025. And I've also taken into consideration and changed up my estimated costs here of their revenue to grow their business, their operating expenditures, etc., to $550 million for 2023 and another $550 million for 2024. And I need to change this so this doesn't say 16 anymore. I need to say 22.4. That is fixed now. But then from that, I get my bottom line profits, which this year in 2022, I still have the company losing $55 million. But next year in 2023, I have the company having a net income of $315 million. And in 2024, $821 million. So almost $1 billion in positive cash flow, net income, which really boosts my price target. Now, however, another change I made to the spreadsheet is I have increased my estimated and assumed reoccurring share dilution from 30% to 50%. I think the company's going to continue to be in growth mode. I don't think the company's going to be scared to use equity to finance a lot of that growth. But even considering the fact I think by 2024 they could have almost 3.5 times their current share count, I still come out with a price target of $137 in 2024 for the company, given their positive cash flow and the net income for 2024. And you can see I still have two different valuation techniques here just because the company currently is unprofitable. I have the price to sales valuation, I have the price to earnings valuation, which gives you two different sets of price targets. I've averaged the two to come up with my personal price target for each individual year. I know some of you might not agree with my 7.5 or 10 or 12.5 price to sales multiple. You might not agree with my 20 to 30 to 40 PE multiple. And that's why this is a spreadsheet. You can download the spreadsheet and change my assumptions, change my inputs to come up with your own estimations and price targets for the company. Again, this is made available to all of my members. I spent hours on this, and I will be keeping this updated. This in itself is value for the membership. So if you want to join, just hit the join button down below. But with that, guys, if you can't tell, I am very bullish on CleanSpark. I think that earnings call yesterday went about as good as it could have. I saw no reason the stock should have been down 7 to 8% after hours yesterday, and obviously, there was no reason because the stock was up 28% today. If you guys are new here or turning not subscribed, I would appreciate hitting that subscribe button down below. Leave a like on this video. And with that, have a great rest of your day. Stay blessed. Peace out.